Investors who have invested in US and Hong Kong stocks should be familiar with Futu Securities, Singapore, and Tiger brokers. Some investors even use the services of these two securities firms at the same time, especially when the IPO of US, Hong Kong, and Singapore stocks is launched. Both can apply together to increase the chances of winning lots. Investors who have invested in US and Hong Kong stocks should be familiar with Futu Securities, Singapore, and Tiger brokers. Some investors even use the services of these two securities firms at the same time, especially when the IPO of US, Hong Kong, and Singapore stocks is launched. Both can apply together to increase the chances of winning lots. With the increasing popularity of US and Hong Kong stock investments in Taiwan and Singapore, the discussion among US securities firms is also increasing. Investors who have not yet joined this ranks may have questions. Which securities firm is better to use? This article provides an in-depth evaluation of Futu Securities, Singapore, and Tiger brokers. Summarizing the backgrounds of the two securities firms, the investment products they support for trading, the commission fees for US and Hong Kong stocks, the types of deposit and withdrawal methods and related fees supported, the platform's supervision and fund security, the latest account opening and deposit discounts, and how investors can make choices. If you are interested in investing in US and Hong Kong stocks but don't know how to choose a securities firm to open an account, I believe this article will be helpful to you. Feel free to leave comments and discuss any questions you have. Futu Singapore Pte. Ltd is a subsidiary of Futu Holdings, Nasdaq, Futu, a US-listed company. It is regulated by the Monetary Authority of Singapore, MAS, and holds a Capital Market Services license, license number, CMS 101000. Futu Securities was founded in 2012 and provides investors with multinational financial trading services through its investment platforms Futu Nyonya and MooMoo, obtaining strategic investments from Tencent, Matrix, and Sequoia Capital. Futu Holdings and its subsidiaries hold a total of 43 financial licenses and qualifications in various mainstream financial markets around the world, covering multiple aspects such as the US stock market, Hong Kong stock market, A-share market, funds, futures, bonds, etc. The cumulative user base of its platform exceeds 14 million. Tiger Brokers was founded in 2014 and officially listed on the Nasdaq Stock Exchange, Tiger, in 2019. It entered the Singapore market in February 2020 and has become a popular internet brokerage firm in Southeast Asia for the US and Hong Kong stock markets. The main creative team has years of experience in finance and the internet, with core members from Morgan Stanley, Tencent, Baidu, Alibaba, and others. They have also received strategic investments from investment institutions such as Xiaomi Technology, Jinggu Fund, Shufeng Evergreen, Huagai Capital, PAC, Prospect Avenue Capital, and Hongtai Capital. Tiger Securities specializes in a one-stop online investment experience of investing globally with one account. Through the exclusive trading platform Tiger Trade, one account can invest in multiple markets, obtain financial data, valuations, and read global economic news for listed companies. Comparison of trading markets: the more the trading market covers, the more investment options available to investors will naturally increase. By comparison, Futu Securities, Singapore, covers the markets of the United States, Hong Kong, Shanghai and Shenzhen, Chinese A-shares, and Singapore, while Tiger Securities has more options in the Australian and London markets. Comparison of investment products: there are many investment and trading products in the market, each with its own characteristics, stability, advantages and disadvantages, as well as investment risks. Diversified investment and trading product options can enrich investment portfolios, optimize asset allocation structures, and also achieve the goal of diversifying investment risks. Futu Securities, Singapore, and Tiger Securities support similar investment products for trading, including stocks, ETFs, options, warrants, bull-bear CBBC, futures, funds, REITs, and more. In terms of deposit fees, both securities firms have subsidiaries in Singapore, hold Singaporean bank accounts, and deposit in Singapore dollars without any fees charged. If depositing funds from other overseas banks, only telegraphic transfer can be used to transfer funds into Singapore dollars, US dollars, Hong Kong dollars, Australian dollars, euros, etc. The two securities firms do not charge any fees, but the remittance and intermediary banks used for wire transfers may charge handling fees, telegram fees, etc. The specific fees are subject to the bank. Note that regardless of which securities platform is used, as long as cross-border wire transfer is involved, the transfer bank and intermediary bank used will charge handling fees, telegram fees, etc. You can inquire about relevant fees from individual banks. The low commission fee is definitely one of the reasons that attracts users to use this securities platform, as it can reduce investment costs. The following summarizes the commission fee structures of Futu Securities, Singapore, and Tiger Securities, including commission rates and platform fees for stocks, ETFs, and options in the US, Hong Kong, and Singapore markets. Futu Securities, Singapore, has zero commission for trading US stocks and ETFs, and no commission is required for each transaction. However, a platform fee of 99 cents per order is required, so the minimum fee for each transaction is 99 cents. The commission for US stock and ETF trading at Tiger Securities is $0.005 per share, with a minimum of 99 cents per transaction. The platform fee is $0.005 per share, with a minimum of $1 per transaction. The meaning is that the minimum payment for each transaction is also $1.99. Futu Securities, Singapore, and Tiger Securities compete fiercely in the Asian market of the US and Hong Kong stocks. From the comparison in this article, it can be seen that the two securities firms have little difference in various aspects. The trading platform's interface is smooth and the user experience is good, and both support simplified and traditional Chinese and English interfaces, making it convenient for users of different languages. The bull circle of Futu Securities, Singapore, and the Tiger community of Tiger Securities are also on par, with lively discussions. Many investors from around the world share their views on individual stocks and current events, allowing them to refer to different investment thinking and strategies. Compared to the trading market, Futu Securities, Singapore, covers the markets of the United States, Hong Kong, Shanghai and Shenzhen, Chinese A-shares, and Singapore, while Tiger Securities has more options in the Australian and London markets. If you are only interested in the US and Hong Kong stock markets, then both Futu Securities, Singapore, and Tiger Securities are suitable. Compared to investment products, Tiger Securities offers a wider range of products. In addition to stocks, ETFs, options, warrants/vouchers, bull and bear CBBC, futures, funds, REITs, it can also trade indices, metals, bonds, etc., making it suitable for investors who pursue rich asset allocation. Compared to the commission rates for U.S. stocks, the difference in commission fees for U.S. stock options, Hong Kong stocks, and Singapore stocks between the two companies is also very small. However, Futu Securities, Singapore, currently does not support trading Hong Kong stock options, and investors interested in investing in Hong Kong stock